JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 14th of October 2020. So yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, some of the charts that I looked at this morning just to see how everything is getting along. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. Feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, now the first one I want to pick up here on is the German DAX. Now so far you can see that the index continues to trade above this, well, in a way we could even say that it's a psychological 13,000 territory. We did get initially a little small drop below it, however, as you can see, the bulls are trying to kind of push this one back up. The index is currently trading slightly in the positive territory, so let's see where this index is going to close in relation to that 13,000 territory. If it stays above this area, then maybe we could see a bit of a push higher again. However, as I mentioned to you guys this morning, that in order to get a little bit more comfortable with the upside, a push above the current highest point of this week near the 13,152 territory would be needed. Until then, if it continues to balance trade somewhere around here, then we'll take a bit of a cautiously bullish approach, I would say. But as I said, like I said, to get a bit more excited with the upside, a push above this barrier at 13,152 territory is needed. In terms of the downside, as again the same idea remains, that if we get a drop below this 13,000 territory, then and we see the price kind of staying below this area, then it increases the chances of a possible test of the 21-day EMA or this upside support line taken from the low, the 25th of September. If this upside line gets broken and the price starts falling below somewhere the 12,873 territory, then yes, we could consider a bit of a decline here. So further declines here could be possible, but at the moment everything's looking okay for this index. But like I said, let's see where it's going to close today in relation to that 13,000 mark. Now jumping into S&P 500, and here the index is, or should I say, was pushing higher until Monday here, but on Tuesday it declined, and as you can see, this level here, this barrier, the 3,535 zone, continued to act as a good area of resistance. Now if we take a look at the cash index and where the price is currently sitting at, let me just jump into the chart. We can see that the price is currently at around 3,517 mark, so basically just around the same level where it closed yesterday, maybe just slightly above it, but still remains below this 3,535 zone. So if you want to look at some higher levels here, wait for another good strong move above this 3,535 territory, and then we could consider a possible move towards the all-time high, which is roughly around here near this 3,588 zone. In terms of the downside, now if we draw this upside support line here, taken from the low, actually not from this low, but from here, from the low of the 24th of September. You can see that we still have a bit of room here. If the index wants to move lower, still this could be seen as a temporary correction. But if this upside line gets broken and the price starts falling somewhere below this area, which I've previously looked at, this 3,425 territory, I told you about this one last week. This was playing it was playing a good role of resistance. Now it could take the role of a good area of support. But if that gets broken, then lower levels here could be met. So again, in order to consider a bit of a decline here, we need to see a break of this upside line and then a drop below this 3,425 zone. If you're looking for some upside, then wait for a push above the 3,535 territory first, and then yep, we could consider a move towards the all-time high near the 3,588 territory. Jumping into another index, the DXY. So this is going to be just a quick update on what's happening here, because this morning I talked about this one. And yep, as you can see, it failed to move towards this downside line taken from the high of the 23rd of March. So basically what I was saying that this morning, that as long as it's going to stay here somewhere, I'm going to take a bit of a neutral stand and not really going to do much. But if it suddenly starts dropping below the this current low of this week, and let me just put this one on the chart very quickly. So the current low this week is around here near the 93 territory. A nice good drop below it may open the door towards lower areas. Until then, we're not really going to do anything. We're just going to continue observing the price action, because even for the upside, I need to see a break of this downside line first and a push above the 93.91 level first. Gold is, well, given that the dollar is declining, gold is pushing back up. It's back above this this downside resistance line taken from the high of the 7th of August. Well, first of all, we can actually get rid of it because it's no longer valid. This is the more valid downside line, and in a way, you can see that the commodity did move higher, but it's currently getting a hold up near this 21-day EMA shown as the yellow line. So and even if it pushes above it, still this downside line could come into play and hold the price from moving higher. But if this gets broken and the price climbs above this 1933 territory, now this is where it could become a little bit more exciting for more buyers, and yep, higher levels here could be met. So again, for now, be very careful here, guys. For the downside, I'm still looking at this 1877 territory, a drop below which could open the door towards slightly lower levels, but still we would be very careful near this 1863 territory, which coincides with the 100-day EMA here shown as the green line. So in other words, for the downside, yes, if we see a drop below this 1877 territory, yes, it could open the door towards lower areas, but there are a bunch of obstacles here on the way, so where the commodity could get held. So that's why it's at the moment for gold, it's not a very clear picture. So that's why we're waiting for a confirmation breakthrough one of the levels. Now jumping into Ripple is drifting back down again, is pushing back below the 0.2550 territory. Although the bulls probably should not get too disappointed yet, because it drifts. The price is falling right now, but it's still above all of these EMAs. So, and it's above both of these lines, the downside line and the upside one. So that's why for now it's yep, it's still not a huge disappointment for the buyers, unless the price starts falling much lower, falls below all of these EMAs, and then breaks this upside support line taken from the low of the 13th of March. Now in that case, yes, this could be a bit of a difficult situation for the buyers. So yep, for now guys, let's keep an eye on this one. Let's keep an eye on the 0.2550 territory, and let's see if it can get back above it. But if it doesn't, then still, like I said, there is a potential for this index, for this crypto to drift lower, test the downside line maybe, and then rebound from it and push higher. So in other words, something like this here could still be possible. Now jumping into AUDCAD, and AUDCAD is at a very interesting spot itself. So looking at this daily chart, you can see why probably. So first of all, we are near this key support zone and near the 0.9392 territory. And in a way, if we want to look at some lower levels, yes, we need a break up below that area, because as you can see, it continues to provide decent support. Now on the other hand, also the pair is stuck below this downside line. So in a way, you can see that the direction for now is to the downside, and the pair could be forming here a nice descending triangle. So if you want to look at some lower levels, yes, wait for that break, because at the moment, as you can see, this is exactly what I've mentioned before when I was covering such patterns, that we need a confirmation drop, and ideally maybe the daily candle remaining below this area, below the 0.9392 zone, before we could consider further declines, because what we don't want to see here is a potential kind of false breakout from, and then kind of the pair reversing back up. In order to consider the upside, well, a break of this downside line is required. So far we're just stuck here in between these two lines, so we're waiting for that nice move outside of this pattern. GBPJPY, now I've mentioned this one, and look at the beautiful move here. So this morning I talked about GBPJPY, and what I was saying, that we were still hanging around somewhere here, and what I was saying, that my next target here is the 135.81 zone, or if it continues to slide, then this 135.06 territory. So it reached the first level, but from which, as you can see, it rebounded and moved back up. However, I'm not saying that this is the kind of the point where you can turn positive. First of all, we'll get rid of this upside line, no longer valid, but mainly going to focus right now on some of these key resistance levels. Now the first one being is the more important being one is this one right here, the current highest point of this week, near the 138 territory. So a nice good pop above it may open the door towards higher levels. For now, guys, it's just going to be a little bit too tricky, because it could travel a little bit higher, find resistance somewhere here, and then reverse back down. So that's why I'm not going to rush into here anything yet. If by any chance by the end of the day we see this daily candle kind of drifting back down and staying below these EMAs, now yep, the downside could resume maybe tomorrow or Friday, and then yep, we could see a test of this area, this 135.81 level again, or this 135.06. So keep your eyes on today's candle. Now the most important, the most interesting one is EURGBP. So look at this roller coaster ride here. Now talk about an annoying pair. So this morning we were stuck here, and so we were stuck here above this this pattern, this falling wedge pattern, and this is what I was saying, that I'm more bullish than bearish, because we were also above this 0.1990 level, and in a way, and that's what in a way everything was kind of pointing more to the upside. But this is one of those situations where I said also that if it starts dropping back inside this pattern, now this is where the bulls should become a bit more cautious. You can see that the pair not only dropped back inside this pattern, it also made its way back to this 0.9025 territory, which this week kind of continues to act as a good area of support, and it marks the low of the 28th of September. Now I'm going to keep an eye on this one, maybe slightly below it we do have this this 100-day EMA, which could maybe also provide a bit of support. So if this pair right now remains in this pattern, then remains in this falling wedge pattern, yep, I'm going to take a bit of a neutral stand here, and I'm going to continue observing it. But if it suddenly drops below the lower side of the of this pattern, now this is where more selling could come in, and a move towards this 200-day EMA could be possible. And finally, Euro USD. So the pair has reversed back to the upside. However, it's stuck near its 21-day EMA. So as I mentioned to you guys previously, that as long as it's going to stuck here, going to remain in this little area right here, I'm going to take a neutral stand and just continue observing the price action, because it's becoming a little bit too difficult here to predict. But if we get a pop above this 1.18 zone, or even better 1.1831 territory, then yes, we could consider a bit of a move higher. But if it doesn't, if it for example here struggles to overcome this 21-day EMA, a push lower towards this level here, the 1.1696, could put the bears kind of on standby, because a nice good drop below this territory may open the door for further declines, and lower levels here could be met. So that's why it could be quite an interesting one for the sellers if we get a drop below this 1.1696 territory. So guys, I hope you found it useful. Thank you very much for watching and listening, and I really appreciate your time. I really do. So if you want to catch my video tomorrow morning, as always, my Trader's Espresso, that's 6 o'clock GMT time. For now, I hope you have a wonderful trading evening if you're still trading, and but still, for everyone have a wonderful evening. See you tomorrow. Join me in my Trader's Espresso, 6 o'clock GMT time, and we'll take it from there. So thank you very much, and bye-bye.